Hello, everybody, and welcome to the Thrive and Prosper podcast. I am your host, Zach Ritchie. Now, before we begin, I wanted to say thank you to everyone who listened and gave us a chance on the first episode. This is obviously very new for us, and we appreciate the feedback that we've gotten so far. And actually, speaking of feedback, one question, comment, etc., that we've gotten multiple times from the first episode is essentially, can I build business credit myself, or is it something that I have to go to a service to do for me? And so with that in mind, we actually brought back our guest from the previous episode. And I can assure you they look steady as a rock in the hot seat again to basically give a follow-up on the ideas of business credit and what the difference is between trying it yourself versus working with an actual professional service. So please welcome back to the podcast, founder and CEO of Fund and Grow, Mr. Ari Page. Ari, feel free to take it from here.
Why is it so important to always have funding in cash available for your business? I mean, how else are you going to fund your exponential growth? You're not going to be able to do that without having access to funding. If you're in real estate, you're not going to be able to buy, hold, and flip as much without accessing the funding. You're not going to be able to invest in your e-commerce business if you're in e-commerce. Whatever your business model, it allows you to invest in yourself. Why is business credit the best form of funding available? Business credit is unsecured, which means that it's safe funding. It's not based off of you personally, and they're not going to come after your kid and your home and your car. And the best part is it doesn't require you to give up equity within your company. You can get access to the funding, and you don't even have to give up your company. This is not like Shark Tank funding where they're trying to harpoon you. We're actually trying to empower you. Now, I often get asked, if I try to do this on my own versus working with a service like Fund and Grow, what's the difference? The difference is obvious. The difference is going to be that you're going to get minimal results at best. When people try to do this on their own, they get a serious lack of approvals. And I'm not trying to put any business down. I'm not trying to put any CEO or entrepreneur or business owner down, because more than likely you could figure it out. You could turn that into your entire business model, and that's all you do from now on. But do you want to be focusing on your business and growing your cash flow and increasing your sales? Or do you want to be focused on getting access to funding? When you use a service like Fund and Grow, it's all done for you. Services like this have insider knowledge, and they have negotiators who know exactly what the banks are looking for. And they'll get you far superior results to you trying to do this on your own. So how much funding does Fund and Grow get? Particularly, we've generated $1.4 billion in total since we've been doing this, and we've been breaking our credit gained amounts just month after month after month. So first of all, we were hitting 23 million a month, then we're hitting 25 million a month. Now we're hitting 26 million a month. This is literally what we're doing all day long. We're generating this type of funding where it's churning it out every single day. So let me give some examples of the cards that we get approved for our clients. And our clients are using it from anything from doing rehabs to purchasing pay-per-click ads like on YouTube and Google. One of the biggest cards that we use is the Chase Inc. Business Cash Card. That's a big card that people can apply for. American Express Blue Business Cash Card is another big one. Chase also has the Inc. Unlimited card. And then there's the Bank of America Business Advantage Unlimited Cash Card. And honestly, the list goes on and on. But those are some of the top cards on the list in terms of unsecured business credit that doesn't appear on your credit report. Now, what's the difference between Fund and Grow doing it for you or you doing it on your own? I'm the first to tell you that you can do this on your own, but I'll also tell you that you won't get the same results like what we've got. We've earned a reputation in the industry, and that's reflected through the reviews we get from our clients on Google, on the Better Business Bureau, on So Tell Us. You can just go on Google and you can see all of our review sites. And when it comes to business credit, Fund and Grow is the experts, and we'll get you the results. So if you're a small business that doesn't need over 100,000, this is still a great way to get access to funding. Whether you need less than 100,000 or whether you need more than 500,000. There's all of this can be done using these unsecured business credit cards. And when someone goes on their own to apply, they're going to, on average, get anywhere from maybe 25,000 to 50,000. And so you can go ahead and apply, and you can try it, and you'll get access to something, and you'll see it works. But then, if you want to get access to a large amount of funding, that's when you work with one of the services like Fund and Grow. And it's unsecured, and it doesn't show up on your personal credit report. That's huge. So I'm going to go ahead and bring up some examples here. Now, the first example that you can see on your screen is you'll see that there's a total amount, the client received a total amount of $95,000 on this batch of funding. And so on his first batch of funding, he received, it looks like a $15,000 card, a $12,000, and a $41,000. And then on the second batch of funding, received $27,000 for a total of $95,000 so far. You can see that initially the client was declined, and then we had an overturn to $41,000, we had an overturn to $12,000, we had an overturn to $15,000, and this is very common with what our clients see. So let's look at the next client. The next client is at $161,000 from their first batch of funding. So on that first batch of funding, you can see that the client has received a $10,000 card, a $100,000 card, a $44,000 card, a $7,000 card, for a total of $161,000. And this client is using a LLC as their company structure. The first client was using a corporation. So then the third client that I'm going to bring up on one batch of funding received $47,000. And so you can see, so this client, obviously, they could have been a younger client. They had a lower credit score. But remember, none of this funding is going to show up on their credit report. It's unsecured, and it's going to report to the tax ID number of the business. And so this client got a $10,000, a $10,000, a $17,200, and a $10,000 for a total of $47,200. Now, what 0% offers do the cards that we apply for come with? Well, it varies from 6 to 24 months, depending on the card. So it could be 0% for as little as 6 months or as long as 24 months. We have some offers that carry 0% for 24 months. And we're able to help you actually get the cash off the card to spend it directly on what you would like to spend it on with your business. Another thing that comes along with getting access to business credit is you get rewards. So let me go over just a little bit of the rewards that you can get. But personally, me, I get thousands of dollars back every quarter. When I say thousands, I'm talking about like 6,000, 7,000 plus per quarter, just because we're spending on our business credit cards. Now, how many people have a facility or you're working from home and you have utilities that you could be paying for on your business credit card? Or you have things that instead of spending out of the cash out of your business account, you spend off of a business card. Well, when you're doing that with the Bank of America Business Advantage card, you get 1.5% cash back. And when you open a business checking account with them, they're going to increase that to 2.62%. Imagine getting 2.6% back of every purchase of everything that you're buying. Let's say that you're purchasing pay-per-click ads and you're spending $100,000 a month. You get $2,600 back from that. How is that not worth it? Look, the Chase Inc. Business Unlimited card, $900 cash back after spending the first $6,000 in the first 3 months. And then from there on, 1.5% cash back. And you can even redeem for cash back or gift cards or travel, whatever you want. So sometimes the travel, you can even stretch it even further with the airline miles. Another example is the American Express Blue Business Cash. And that's, you earn 2% cash back on all eligible purchases up to $50,000 per year, and then 1% cash back, beyond that. And so what we see here, folks, is just absolutely amazing and stunning ways to be able to not only get access to funding, but be able to do that safely, not Shark Tank funding where they're taking away equity from your company, and then be able to earn cash back at the same time while being able to increase your cash flow. I mean, this is just absolutely beneficial for any small business.
You know, one of the most common uses for business credit is just running everyday operations and keeping things afloat for your company. But how about using it to take your business to the next level? Let's say your business is running efficiently, your customers are happy, and your sales are at a decent volume, but you don't have enough capital left over to dedicate to expansion. Well, I'd recommend not going out and just randomly applying for another loan. Instead, use unsecured business credit. So unsecured means that it's safe credit. Cashback rewards is one of the many lucrative benefits you receive when using business credit. And you can use the cash back the lenders give you for anything that your business needs, whether it's buying another truck or renting another storage warehouse or even increasing inventory or upgrading equipment. And you might be asking, well, Ari, how much spending do I need to do to earn a substantial amount of this cash back? Well, if you're putting everyday business expenses on these cards, that amount will accumulate pretty quickly. I mean, here at Fund and Grow, we receive thousands of dollars every quarter simply by paying for things we already have to cover, such as our electric bill, office supplies. And it's not like we're going on a shopping spree to acquire this type of cash back, folks. This is just from buying things that our business has to purchase that we'd be picking up regardless, like your electric bill. So another reason why entrepreneurs, myself included, use business credit to scale is because it's at zero interest. This means there's an introductory interest rate of anywhere from 6 to 22 months at 0%. So this initial 0% period is crucial to growing your business because, again, it gives you access to funds you'd otherwise be paying interest towards. So instead, your monthly payments go straight to the principal to wipe out the actual balance much faster than if only a fraction of your payment was being applied towards the balance and you're just paying mostly interest. So any other funding method you use to fund your business, whether it's a business loan or some kind of investor, you're paying interest and huge closing costs on the amount you borrow, but not when you use business credit. So using business credit to hire or pay for marketing expenses, it's really one of the best investments you can make in your business. And depending on the size of your team, it may be more feasible to actually outsource this option. But if you have the space to hire in-house marketing professionals, you could go that route as well. And either way, marketing is a great investment to increase sales and volume. In fact, it recently came out that 86% of small businesses have increased their brand awareness by utilizing digital marketing channels alone. So this 0% business credit runway allows you to establish healthy and revolving access to credit that gives your business room to focus on this new marketing growth. And I think every entrepreneur has found themselves in a situation where an amazing opportunity presents itself, but you didn't have the funds available to act on it. And with this type of funding we're talking about, you'll never have to encounter that kind of situation ever again. And unlike many other options out there, business credit is actually revolving and you can use it over and over. So you can spend your credit limit, pay it back, then use the funds all over again. So I can assure you that this process works seamlessly. And having access to this type of financing will ensure you have the funds ready to go when a potential profitable venture comes your way. Not to mention, you can regularly receive increases on these cards to maximize your spending power even further. We've all heard the saying, knowledge is power, countless times, but it couldn't be more true here. By taking time to attend trainings, mastermind groups, and other networking opportunities, you invest in yourself and your skill set. I can't even tell you how much I've learned from the mastermind groups that I'm a part of, and it's definitely a mutually beneficial relationship. They're investing their knowledge into me, and I'm investing my knowledge back into them. So we're helping each other improve and find better ways of doing things in our businesses. And you can leverage business credit to pay for expenses associated with attending trainings and mastermind opportunities. You can even send your team. So not only are you avoiding paying out of pocket for these things, but you're also earning cash back by going to masterminds and building your company. So the strategy is everything in business, and using the tools you already have available is the simplest way to grow your business. I don't know any reason why an entrepreneur would not want access to business credit. We'll explore what's behind each denial and offer solutions on how to make sure that you get approved instead, so you can access the capital you need to start or grow your business. Now, before we get started, don't forget to hit the subscribe button to receive a notification when we post more videos like this so you can stay up to date on all the lending tips, tricks, and updates happening in today's economic climate. So with all that said, let's jump into the 5 reasons why your business credit applications are getting denied. Reason number 1, improper entity setup. Many people don't know this, but entity structuring greatly impacts business credit funding. There are 3 main points that are absolutely crucial when it comes to getting funding from the banks. The first thing is that you're in an industry that is safe. So if I'm in the investment industry and I approach the banks with an entity that has a name that insinuates a risky business model, they're going to see that name and industry combination and immediately say no. There were times in the past where real estate, for example, was viewed as the riskiest industry. But thankfully, we've moved beyond that and it's no longer viewed that way. So what this means is you have to look at your industry and analyze if it's lendable or not using what is currently going on in the banking industry. We help our clients do this by analyzing data that we've collected that systematically shows what types of entities and industries the banks are lending to the most. And from there, we make sure that an applicant is set up with an entity in a lendable industry that's going to get approved for the most business credit possible. The other aspect of this is the name of the entity. Like I said, you can't use a risky name because it transmits to the banks that you could be a high risk. The name of your company can either give confidence to the lender or it can set off red flags. Your entity should have a strong, powerful name that doesn't make it seem risky or questionable to the banks. The third part of your entity that you want to look at is the seasoning. So that's how long your business has been open. This is very important. You need to have at least 2 years of seasoning for optimal results. Now, if you're a startup or you don't have any entity set up, you may be wondering, well, how do I do that? Well, ideally, you should stay away from the shelf corporations or an entity that's been sitting for a while, set up just to use for funding. We never recommend going this route with shelf corps. Instead, what we recommend is that you use a sole proprietor, which allows you to use your length of experience in your industry as a way of backdating the entity and getting you all the seasoning your company deserves and needs to get funding. When you're setting up the sole proprietor, the IRS will ask you how long you've been in your industry, and boom, there's your seasoning. You can't do that with an LLC or an S Corp or a C Corp, but you can with a sole proprietor. However, you only use a sole proprietor for banking purposes only. I'm not saying to use the sole proprietor if you're going to be earning income or using it as your operating entity. You want to set it up within business management to manage your investments and have it manage your business in order to use it to get funding from the banks. That's it. Reason number 2, negative history. Next, we're going to talk about negative banking history. This one is very important as well. Basically, what I mean is that you don't want to submit business credit applications with a bank that knows you have defaulted or been late on previous loans. If you've received a loan in the past for your business and you were late on payments for a long period of time, or if you had to declare bankruptcy, you don't want to approach that bank again for business credit applications because that relationship's obviously already gone sour. They aren't going to trust you as much to repay another loan based on your past negative history with them. Instead, go after banks that you have either positive relationships with or banks that you want to establish a relationship with. Banks that you already have a good relationship with are your best option because they already have a rapport with you and trust you to repay your loan. So they'll be more likely to extend financing to you again with even higher approval amounts because that relationship has already been established. Reason number 3, poor or unestablished personal credit profile. Now you're probably wondering, hey, Ari, I'm going after business credit that doesn't report to my personal credit report. So why do the banks care about my personal credit? Well, let me tell you, your personal credit ties into business credit, even though it will never show up on your personal credit report. This is crucial to understand, so pay close attention, folks. When you're going to the banks to get credit, you need to know what the banks are thinking about you when they review your credit application and they review your report. For most consumers, this step is particularly challenging to do because most people only use free credit monitoring apps to look at their credit report. Now, these sites don't show you the full picture that the banks see because the free options only use a snapshot of accounts and data from up to 2 years ago. So you may see a 760 with no derogatory marks, but in reality, with a weighted scoring module, your score is much lower than that, and your late remarks from 4 years ago are still present when the banks take a look. So when our clients work with us, we have access to bank-level credit reports, so we can see exactly what the lenders would see if this client were to move forward and submit credit applications. We comb through our clients' credit reports and look at the score printouts to eliminate some of the issues that are weakening or bringing down their credit scores. Doing this for our clients makes sure that when we apply, we know the banks are going to look at our clients favorably, which maximizes their approvals and the funding that they're approved for. So to make your personal credit report look as appealing as possible to the banks, you want to make sure you have established credit card accounts with major lenders like Bank of America or American Express, for example. Store cards don't count as major lenders. So although they may impact your overall payment history, the banks don't weigh those as heavily when deciding whether to lend to you. Also, if you have late payments, collections, charge-offs, all those derogatory marks on your credit report that are crippling your score, you should work on removing those before even applying in order to avoid wasting your time and getting denied across the board. Now, on the other hand, not having any credit is just as harmful. If you've never had a credit card or all your credit cards are closed, the banks don't know how you handle credit funding or whether you're trustworthy when it comes to repaying the loan. So boom, you end up getting denied. Ideally, you should have a positive credit history established in order to get approved for business credit. Now, really quickly, before we move on into the 4th reason your business credit applications are being denied, go ahead and like this video. It lets me know that you're enjoying this type of content so we can make more like it in order to help you get approved for business capital. So give this video a thumbs up, and we're going to jump right into the 4th reason, which is the age of existing business credit accounts. Now, this is one that most people, they honestly turn a blind eye to, but it's really important. If you were recently approved for business credit and you have used your cards for a couple of months, maybe you've made 1 or 2 payments on it and you apply for more from the same banks, you're probably going to get denied. Now, why is that? Because not enough time has passed to tell the banks you're handling that account correctly. The banks want to see several months of usage and repayment before extending additional credit. So utilizing the funding that you have and not letting the card just sit in a drawer is crucial to getting access to additional business credit and higher credit limits. The fifth reason you're being denied ties right into what we just talked about with the age of your business accounts. Let's say you just applied for 3 business credit cards and maybe 2 were approved while you were denied for 1, and 2 months later, you're back again applying for more. Not only are the banks going to see that you recently racked up 3 credit inquiries on your report, but they're also going to see you were denied. They're going to wonder why you were denied and see that there's hardly any seasoning on the accounts you were approved for, and they're just going to deny you. Having too many recent inquiries, especially from major institutions, makes your credit profile look desperate for funding to the banks, and they deem that risky, so they just deny you and don't give your application another look. You never want to look desperate when applying for business credit, so you want to work on removing those inquiries from your personal credit report, which is 100% legal to do because these inquiries came from a business application. Nothing business credit related is supposed to be on your personal credit report, so you can dispute these inquiries and have them removed, which is something that we teach our clients how to do. Now from there, we streamline the business credit stacking process to get approved for the highest amounts of business credit very quickly. So here you have the 5 reasons why your business credit applications may be getting denied. If you want to take the next step and get serious about building your business credit profile and getting access to business funding, then click the link in the description below to watch our free masterclass. In that class, we'll give you more tricks like these to get approved for up to $250,000 in 0% interest business credit. We go over some of the negotiation tactics we use to get our clients approved and even teach you how to uncover the hidden negative items on your credit reports that are negatively impacting your credit scores and how you can correct them to get the business credit approvals that you deserve.
Warning: the financial insights shared on this platform reflect personal viewpoints and are not expert advice. Fund and Grow, its staff and agents are not liable for any results from following these insights. Take time to do your own research or consult a financial advisor for professional advice. Decisions made based on Fund and Grow's podcast content are solely at your own risk. Since 2007, Fund and Grow has helped over 30,000 business owners and real estate investors across America get access to over $1.6 billion in growth capital. We're on a mission to empower entrepreneurs and investors by helping them utilize the smartest form of funding: low-interest, unsecured business credit.